The first one we're going to talk about is famous brands which own Steers, Wimpy, Debonairs, Mugg Bean, Tashas and Mr Bigg'S. It has a market cap of 11.3 billion rand, a PE ratio of 23 and a dividend yield of 3.4%. So famous brands, historically very acquisitive, going around buying a lot of these well-established brands and then putting them into their sort of staple. They've got a great logistics and manufacturing type business in the background there that obviously, pushes all the products through their brands. That seems to be quite a good business model.
It is. I mean, a very, very diversified portfolio of brands, 27 odd. 2,500 stores or retail outlets at the moment. So a big player within the sector. They've done fantastically well. The last 16 years under the leadership of Kevin Hedderwick, they took it from 2 brands and 100 million rand company to, as we saw, over 10 billion rand and 27. He's recently announced that he is stepping down. So that is one I'm looking at very closely. His successor, how does that come into it? He is staying on as a strategic advisor, but he has been instrumental in transforming this group to a really formidable player there.
Let's just have a look at the share price there. And as I mentioned, you can see great performance from 25 rand roundabouts in 2011, pushing up to almost 150 at some point at the end of last year, and pulling back slightly. I guess it is something that targets the South African consumer, and what some may be concerned with the strength of the consumer in South Africa. Their most recent sort of announcement acquisition, they're bringing in Paul's, which is a bakery from France, but otherwise been fairly slow in terms of their history and their own standards in terms of acquiring businesses. Do you think this is a function of just lack of opportunities, or maybe they feel they've got enough at the moment and they're just going to push their existing brands?
Yeah, it's been quiet for their standards. You're 100% right. I think Paul was a good one. It didn't compete with any of the existing portfolio brands. I think also what you're seeing is a trend of the higher levels within the consumer market being quite resilient, but the mid and particularly the low levels are particularly weak in this economic environment, as you said, and it looks like they're getting worse. So their portfolio of brands more skewed to the middle and upside, which is a good thing. I think they're trying to get all the synergies and the efficiencies out of their distribution that they can, but the profitability still comes from that franchising model that they run there. Yeah.
And I must say, sort of on the ground floor, I agree with you, because you walk past the Tashas and there's a queue for days, but often you walk past Steers and there's hardly anyone in there. So you can see the sort of shift. And I think the actual sit-down restaurant model in South Africa is growing fast. It's sort of aspirational. People want to be seen there. People enjoy it more and more. So I think that's certainly a niche. They've got almost zero debt on the balance sheet. Do you foresee any more acquisitions?
Look, I think they're probably keeping that war chest, keeping the powder dry there. I think we might get some distressed sales from maybe these smaller chains, that type of thing. I don't think they're going to be looking in the lower end at this stage, but there might be some of the high-end brands on sale, like Paul's, that we saw, that you'll start to get really key strategic additions to that portfolio.
Hot or not on famous brands?
Sure, it's always an easy one to say hot on. I'm cautious in this environment.
Come on.
I'm cautious in this environment. I think what's holding me back is that the valuation is always rich in this company. And there is potentially some potential for disappointment. They haven't given us any reason to believe it, but if you look at the rest of the sector, you look at some of the big groups globally, the Yums, McDonald's less so, there has been a re-rating and a move down. I just probably think it's not the environment to chase a valuation. So I'm going to go not hot after all that.
I'm going to disagree with you on this one, because I do think that there is a nice dividend to underpin there if you're worried about fundamentals. I do agree with you that it does have specific risks to the South African consumer. It's heavily dependent on the strength of the South African consumer, but I think their mix amongst the LSM groups is pretty solid. So I'm going to be hot on famous brands.